Hi folks, it's Eden CryptoBirb speaking and welcome to today's quick Friday Bitcoin overview as we head into the weekend. Let's take a look at what's been going on lately, right? We've seen this kind of like a late approach, late attempt to break above the 200 day Bitcoin Pro trend, which is more skewed towards the recent data, right? This is recency biased trend similar to EMA, sensitive to the most recent price action data, right? It's not EMA though, right? It's a combination of different custom indicators. Still, what matters is that there's been this first kind of like an approach, first approach over the resistance of $28,000 at the same time. At that time, it was 27,700 that played the main critical resistance role. And kind of like we went above that, right? Well, is this really relevant? There is some pros and cons behind that, right? Because when you think about it, there is this very interesting approach and then look at it, an angle of looking at it that is promoted by my good friend Axel Kibana CMT that is called otherwise as cockroach theory, right? Because if there is one cockroach, it means that there is more likely more of those, right? If there is one breakout above 28 or whatever resistance, that means that perhaps there are more breakouts coming, right? It's kind of like the first glimpse, first early warning that you should consider at least, right? So regardless of what's going to happen, because that's something that we don't know for future, right? There are a couple of ways that we can look at it. First of all, the main resistance was kind of like rejected, right? The main resistance of about $29,000 since the support was broken, the polarity has flipped, and there's nothing but rejection so far. There's been rejection of the previous support level, right? Which shows kind of like weakness when it showed, again, when it showed strength in the past, right? One that later was broken. So what we know is that the trend, 200-day trend, is kind of like curving down. It's moving down, it's falling, which is fairly opposite to what was the case, to what had been the case for about 80% of the time, right, since 2023 started. Because for about 8 months out of 10, right, we're now in October, the 10th month of the year. Now, for 8 months out of 10, we basically were moving up, right? That was kind of like the situation. That was the fact. So 80% of the time we were moving up. So there is a local weakness, and this local weakness actually transpired in the typical seasonal weakness, right? That you can see and observe in the markets towards the end of the quarter three, when there are fewer traders in the market, there's less interest, everybody takes vacation, enjoys their life and chills, right? There's not much activity, and the whole business kind of like gets back on the track when people get back to schools and the whole business starts operating, and we kind of like tend to warm up towards the end of the year with the Black Friday, the Thanksgiving and the Christmas rally and so on and so forth. So this this local weakness, this local breakdown came in line exactly with the expectations of the seasonal weakness, right? And I was very vocal about the weakness of August, which is fairly, somewhere closer to the break even, or some sources say and suggest that it's actually on the negative side. What is unquestionable and irrefutable as a fact is that historically September was the only losing month of the year, averaging the loss of 6.5%, right? So now we are in October that typically averages a gain of 10, 15, or even 20%, depending on the data sources. The most relevant ones, averaging and gauging, the last 13 years, basically give you an average of 20% of the average return, with the month alone being up 70% of the time. So what's relevant, right? Again, technically, you can find many different ways to look at the same chart, right, and the same patterns. So some people would say the resistance in there, right? Again, the cockroach theory would say, hey, this is a first breakout in a long while above the falling trend. So maybe it's a starting point of a reversal, so kind of like an early warning. Some people say, okay, it's some rising kind of like a wedge thing, or a bearish pennant, if you will, much more than a rising wedge. So it all does not matter much, because what matters is that we search for those big confirmation confluence and big confirmation coming from many different techniques, right? So in technical analysis, you can diversify and categorize a couple of techniques such as price action alone, where you just observe the price levels, right? So-called the naked chart. You can observe the momentum, right, such as RSI, or Relative Strength Index, or perhaps you observe the volume breakouts, right? You observe where the volume spikes, and this typically kind of like brings the biggest amount of interest and the potential inflection point in the market. Or you can observe the time cycles, right, and how much time the price spends above a critical level, for instance. You can also observe the breadth, right? Whether it's a crypto itself, kind of like the Bitcoin itself, just moving into crypto and the whole crypto market is staying stalled and flat and sideways, or the whole market is moving up, right? And 100% of the coins are moving in the direction of rising moving averages. So regardless of what that is, of course, one of the factors can also be dictated by the volatility. And this volatility has been declining. This is the 50-day ATR trend, right? The black dots are the ATR 14. So the 14-day averaged ATR, right? ATR taken, which is the average true range taken as the spread between the highs and the lows, kind of like long story short, and taken over the last 14 days. So it takes the average, or it takes the spread over the 14 days, and it diversifies, or should I say, distinguishes the highest high and the lowest low in the period. And the bigger the spread, the more volatility, of course, right? So the smaller the spread, the less volatility. So we can clearly see that the trend that early in the year kind of like broke out above the $20,000, 18K and $20,000. It moved up for about 2-3 months, right? Maybe 4 months, until it peaked. The volatility peaked, on the average itself kind of like inflected towards the May, right? Which funnily enough coincided with the sell in May and go away pattern, right? Again, another proof and case study of the seasonal patterns in play and playing in work. So here again, there's a lot of I should say chop lately, and this chop is a result of noise. And noise is a synonym of low volatility in a way, right? Because if there's low volatility, it means again that there's spread between the highest high and the lowest low in a given period is small, right? In this case, in decreasing volatility, it's decreasing, right? So there is consolidation and the tightening of a range when the price action becomes more narrower more and more, right? This is what kind of like comes typically and creates some sort of like coiling patterns. This is also why you see a lot of expansion out of the contraction of the volatility, right? Because market kind of like just compresses itself until it finally springs positively or negatively up to or to the downside. So regardless of the direction, there's been a lot of noise in the falling 200-day B Pro trend conditions, right? Which it's on its own, again, transpires in the typical seasonal weakness seen in August and September, right? September, as Jeff and I put together this Bitcoin seasonality paper, was the kind of like potentially best buying month for the long term, when averages suggest that quarter four as a whole, October, November, December averages to about 50% gain, right? So over the last 13 years, if you buy into October 1st and sell into the end of the year, you would average out a gain 50% every year on average again, right? So having so much chop, so much sideways, and indecision between $25,000 and $32,000, we can clearly say that there's been this contraction of volatility. The market has become less and less volatile. And that's exactly what the 50-day moving average of the ATR is kind of like implying, right? The declining volatility imposes and implies much more noise. Much more noise means much more random walk, much more randomness in the movements, right? It's more becoming more and more over the time as the volatility contracts and declines. That this is a little bit more of a coin flip than it is a clear technical trend, right? So because technical analysis, especially in cryptocurrencies, is driven much more by behavioral analysis, by behavioral aspects of psychology, right? Our biases, our hindsight bias, conservative bias, anchoring, confirmation bias, outcome bias, hindsight bias, like I said, framing, phrasing, recency, self-attribution, overconfidence, and all of those emotional information processing and cognitive dissonance biases, right? So because of our opinions, uh, we love to have opinions, right? And if they are strong, if they're directional, they're going to be trend promoting because we say, hey, everybody else is buying, so better I should buy as well, right? So regardless if it makes sense or not, we would probably buy just because everybody else is buying. So if there is a strong trend, this trend is likely to be promoted. If there is no trend or the volatility contracts, this promotes indecision, and the more the indecision there is, the more kind of like disbelief it generates, because over the time when you see the market kind of like again just chops around, there is going to be buy the support and sell the resistance rumor, right? Or the heuristic, I should say, the rule of thumb, right? Buy the support and sell the resistance. So if you're eager and willing to buy the support and sell the resistance, you're not gonna position yourself exactly the support because, hey, guess what? Perhaps the prices are not gonna go there. Perhaps there's somebody else with bigger money just kind of like trying to hunt you down and override you, right? And front run you, leaving you behind. And if you kind of like are greedy enough to, not buy Bitcoin for $20,000 and $1, but you really want an encore so much to $20,000 is a round number, right? Then just maybe it's gonna go to $20,002 and immediately reverse back, and you're gonna be left behind. So driven by this infinite or finite cycle of fear and greed, you tend to see a traders buying into support and selling into resistance, which causes a lot of order clustering, right? So the orders are going to kind of like accumulate and cluster towards the support or from the support towards the resistance, right? And the prices are going to oscillate, more and more tightly consolidating because these prices are gonna again just kind of like narrow in terms of the volatility as people apply this buy the support and sell the resistance heuristic, right? Because again, if they see that the resistance kind of like gets thicker, right, because the market reverses earlier, right, then perhaps they're gonna sell or place their ask positions, earlier, right, in the price scale, right, which means lower, and they're gonna buy higher, right? And the market kind of like turns back, it bounces higher, or sorry, it bounces slightly higher than it did before, right? Let's say here. And what happens is, okay, people would react to it and see, okay, the price is kind of like reverted lower. There was a swing high, kind of like lower than it was anticipated or earlier, right? So they're going to place their ask orders lower, and the market is going to clash with a lot of sell orders in here, right? Which kind of like in turn goes on and repeats itself, which is why the market shrinks in terms of the volatility, and that's been the condition over the last several months since the sell and main go away pattern. That's exactly what's been the case in this rectangle, in this box of 25 all the way to 32. So what happens when it finally kind of like just compresses itself, right? The market is very tense and very compressed. Well, it breaks out. There is a burst in volatility. And when there's a burst in volatility, this may bring a confirmation itself, right? Because the confirmation concept means that you want to confirm a critical breakout when the price breaks out to new levels above the resistance or support, above the previous record highs or previous record lows, in a consistent, reliable, confluent manner. So you want to see and get confirmation from all of those techniques. For instance, let's take a look at this, right? This breakout above $18,000 or $20,000. So we love the price levels. The round number, the price action play a critical role because those round numbers are easy to remember, easy to memorize, and people are gonna basically take them as a frame of reference, right? So breaking above critical levels, the price action levels, is one confirmation. Another confirmation, if this level is not only broken by half a cent, but it's actually broken by significant margin, right? So the price action distance traveled as in 2% margin or 5% margin or 10% margin above a critical threshold round number brings more critical confirmation, right? So confirmation from breaking the price level alone. Another confirmation is another technique, again, by the price percentage traveled, right, for the distance itself. Again, another technique. If you were to observe the time spent above a critical level, such as time spent above $20,000, it's going to be confluent, or sort of it's going to be confirmed when the price stays above $20,000 for a long time, rather than just kind of like stays there for 1 second and just comes back, right? So another confirmation is coming from the time factor. So the more time the price spends or stays above a critical resistance level, the more confirmed it becomes, right? So you have another technique of confirming the breakouts. Yet another technique of confirming the breakouts is by observing the breadth in the market. Like I said, if Bitcoin breaks out away itself and there are 15,000 coins, other coins that are down at that time, on that day, then perhaps this breakout is not much credible. But if the Bitcoin's breakout aligns and coincides with the 15,000 other cryptocurrencies breaking out at the same time, well, then this is a whole big reversal coming in, not just a coincidental thing, right? So the fourth technique. Another technique is by volume. If there is a volume burst, it means there is a big spike in interest, the big spike in the turnover, or I should say the transaction volume, right? So how many transactions happened and took place across this critical breakout? If the transactions here kind of like a small and small in the sideways, which are typically are, and there's a significant breakout right on the breakout date, this is where you kind of like observe and get the confirmation that, okay, there was the biggest number of transactions, the biggest amount of trades. So that was the biggest kind of like a reshuffle of the market and the polarity change, right? Another confirmation is coming from the volatility. And like I said, the ATR and the averaging, for instance, observing the 50-day moving average of the ATR basically tells you that, okay, if there is a breakout above this average trend volatility, right, then this volatility breakout is real. And if there is a breakout and it's confirmed by volatility, then it's real, right? So over the time, long story short, the volatility has been shrinking. So the breakouts have become less and less reliable. They have become less and less trend promoting and more trend inhibiting, right? Promoting the mean reversion, promoting the sideways environment for the past several months. So that has been the condition, right? So knowing about that, again, we need to search for confirmation. We need to search for confirmation from those several techniques, such as, again, price action level itself, right? We clearly can tell that the highs and the lows are defined within the clearly given range of $25,000 approximately and 32,000. So if Bitcoin breaks below 25 or breaks above 32, well, that's going to be a credible confirmation on one hand. If there is a price action distance traveled, again, and Bitcoin breaks above 32, above, let's say, not just $1 or 1 cent, but it breaks higher for like 10% margin or 5% margin, this is going to be credible. Same to the downside, right? If Bitcoin breaks above $32,000 and it stays there for like 2 weeks and not just 5 seconds, then it's also going to be confirmed. If there is a volume breakout, kind of like, volume breakout on the spike confirmation, then it also becomes more relevant and more confirmed, right? With the better chances that this is real deal and not just accidental, kind of like a slip and accidental erratic movement. And finally, we search for the volatility confirmation, right? You can clearly tell the volatility has been shrinking, it's been declining, it's been going down. So when you finally see this major breakout in the volatility and it breaks away and breaks away higher and it kind of like just triples and quadruples the regular daily volatility, instead of seeing $500 or $600 average daily movement over the last 14 days, and you see, $1,000, so $1,500 or $2,000, this means that there is a 4x of a regular daily status, of a regular daily volatility. That type of confirmation could mean that you're looking at a real deal, actual breakout. Until then, the volatility shrinks, the volatility compresses. It kind of like, again, just concludes to smaller and smaller pieces until it finally finds the major breakout and expansion, right? So again, knowing the historical records, in October averaging a gain of 20%, November averaging a gain of 40%, and the whole quarter four with December averaging a total of 50% gain over the last 13 years or so, and then perhaps the breakout is to the upside. Who knows what's going to happen in the future? We don't know what's going to happen in the future. We have no idea. Technical analysis is not a set of squiggle lines to predict the future. It's not a crystal ball, right? It barely talks about facts, about the quantified data and facts in order to help you set the risk management rules, right? Because if you know that there is less volatility, then you should probably set your stop losses, a little bit wider, for instance, right? Or you can manage and size your positions based on volatility. You can have more money placed and allocated into something that is less volatile and less money in something that is more volatile. So if the volatility has been coming down and coming off, just maybe it will make sense to consider that, right? Especially with the bullish seasonality towards the end of the year and very positive 95% winning pre-election year, 90 of 20 cases of the pre-election years recorded since the Second World War basically brought positive returns. So long story short, search for confirmation until you see a break of confirmation above, below 25 or above 32. You're likely going to see loss aversion and all the biases kind of like transpiring more and more, resulting in concluding in the contracting volatility until it finally expands and breaks the major breakout. And this major breakout should be confirmed by either or all of the techniques: the price action around numbers levels, the price action travel percentage distance, the time, the volatility, the breadth, the volume, and so on and so forth, right? So until you see that, we kind of like continue to move inside the box. God knows how long it's going to take, right? So I hope it helps. And before I go, November 15th through 21, we're going to host our fifth edition of Free Trading Congress. You're going to be able to learn to get back on your feet faster, stop losing, start winning with the world's proficient experts. Stay tuned. November